Okay, good morning, everyone. Good to see everyone here. Morning. Hi, Kelvin, Peng Yi, Ong Peng Eng, Valerie. Good to see everyone here, Edmund. Okay, so first thing first, today event is open to the public. Okay, can we say hello to people out there? SNT graduates. Right now, we got like 241 in the Zoom room. Okay, so today we'll be doing slightly different. Okay, for SMT graduates. Okay, remember to go to the Zoom room later. Okay, go to the Zoom room. Okay, you can check the face. You can go to SMT graduates group to check the Zoom room. Okay, because we will not be going through the portfolio. Okay. So to have some distinctions between the SMT graduate and non-SMT graduates. Okay, so if you are SMT graduates, please go to the Facebook group, SMT graduates Facebook group, check the Zoom room link, and then join the Zoom instead. Okay, instead of using StreamYard. Okay, so for those people who are using StreamYard, we will be going through the markets. We'll be going through about interest rates, about what happened after interest rates hike. And then, okay, maybe we'll share a few stocks, but we will not be going through the portfolio. Type yes if you understand. How many of you were here during the last, yesterday? How many were here yesterday when we were like chit-chatting with Joe, Augustine, and who's that, Royston? Type me if you are here. Oh, no. Quite good, right? I think that I feel the session was quite good. Yeah. So how many agree was good? It was quite good, right? So yeah, we went to very different topics, right? To somewhere from like, oh, market is going to be good, to World War III, what's going to happen if something like that happened, right? So, but yeah, so first thing first, whatever I share with you today is for education purpose. These are not advice to buy and sell. Type yes if you understand. These are not advice, okay? These are just entertainment, okay? We, in our SMT graduate, we call this Monday morning one, entertainment, okay? It is not advice to buy and sell. It's just take a webinar that we go through every week with our SMT people, graduates, and we just have entertain each other, okay? Okay, type MME if you understand. Okay. Who haven't mute yet? Okay, let's mute everybody. Okay. Okay. So yeah, so let's get started. Okay. First thing first, we will look at the, instead of just looking at the market outlook and looking at the charts. Okay, I hope at least for the first part, right, for public, right, we want to make it more educational. Okay, instead of just looking at the charts, because some of the people from the public may not know how to read what is this green arrow and red candle. Okay, so we'll make it more education. Okay, educational. So how many of y'all are looking at the market or last week bought some stocks? Like me, we bought some stock last week. Okay, so what is the narrative recently? What is the story that we talk about recently? Recently, market down a bit, right? This week, market down a bit. What is the story that you hear from the market? Okay, inflation is one. What else? What other story? Okay, last week was down. Okay, so what the story? There was the top of the a very more hawkish Fed. Okay, a more hawkish Fed due to the rise of inflation. They may want to increase the rate, not only more, but also faster. Okay, so what does it mean for you? So we have two things. First thing is the rise in interest rates. Okay, there's the fear of rise in interest rate because there's a fear of a hawkish Fed. Okay, second one is also inflation. Okay, so we will tackle these two things. Okay, first is the rise of interest rate first. Okay, rise of interest rate. SMT graduates already know, right? SMT graduates already know that rise of interest rate, usually what happened after the rise of interest rate? Do you all know initial rise? After they drop, you know, then markets at the real bottom, and then when they first increase the interest rate, what happened. SMT graduates already know, but I want to show you all some charts. Okay, for those that don't know one, actually I show you all some charts. Okay, so this is the S&P 500 performance. Okay, after since 1955. Okay, from the initial height. Okay, after that. Okay, so before the initial height, the market is more negative lah. Okay, in general, after the rate hike, after the initial height, right, market is more positive. Okay, this is on the graph on a chart basis. Okay, on the chart basis, this is how it looks like after the initial rate hike. Okay, another way to look at it is S&P 500. Okay, S&P 500 performance after the first rate hike. Okay, so when I'm just talking about rate hike, we isolate first. We isolate rate hike first, then after we isolate inflation. Okay, so there are two different things. Okay, so rate hike. Okay, rate hike. After these are all the previous rate hike from 1987. I think later we got earlier data even. Okay, 87. Okay, all the different date of the initial rate hike. Okay, 3 months later, first 3 months later may not be so positive. Okay, on average it's up 0.5%. Medium is still down, but only 42% positive. But can you see like 6 months later after the initial rate hike? Okay, 6 months later after the initial rate hike, 85% is up. Okay, 85% is up, and on average the percentage up is 7.1%. Can you see that? Okay, 7.1%. In fact, in all this so many occasions, right, there's only one time that it was down. Okay, so but it's 85% that it will be up. Okay, and then 12 months later, then we have 85% up, and then this is the percentage up. Okay, 85% of the time it was up, and then this was the average percentage up. Okay, 87. I think there was October. There was a October to 1987 called Black October. Okay, but nothing to do with this. Okay, so Black Friday. Okay, so but can you all see that? Can you all see that 6 months later, 1 year later, in general, the market is up. Okay, by the way, you all hear knocking noise, is because got renovation downstairs. Okay, apologize for that. Okay, so guys, don't be so so initially what happened, generally what happened is the initial reaction, okay, or even before the initial rate hike, there will be the fear of the rate hike. Okay, they will say, hey, going to hike already. So people are more bearish. Okay, they are more cautious. Okay, but the moment they hike, okay, the moment they hike, there may be a knee-jerk reaction. The market may down. Okay, may down a bit. But after that, when it becomes clearer, the market generally recover. Okay, we think about it. Why is it that the Fed want to increase interest rate? Okay, question. Why do you think the Fed want to increase interest rate? Do you think they don't like stocks to go up or what? What do you think they want to increase interest rate? You all know? Curb inflation. Curb inflation is one thing, okay, but why must curb inflation? Why must curb thing? No, not prevent recession, but why do you think must curb inflation? Because if they don't curb inflation, right, then what happened? You will have what? Bubble. Do you follow what I'm saying? That a lot of money chasing lesser quantity, right? So there will be bubble. Do you follow what I'm saying? So they need to cool down the inflation so that it doesn't form into a big bubble. Do you follow what I'm saying? That's the reason why. Okay, and also when okay, so let's look at this one, right? Let's look at this economic cycle. Okay, so we have, I start from here, right? Reflation is like this is like slow down. Okay, slow down and then to reflation. During reflation, what happened is that is the slowing down of the economy. Okay, the slowing of the economy and the interest rate also slow down. Okay, so this is the phase one when economy slow down, interest rate slow down. Okay, So after that, right, there will be a recovery phase, okay, recovery phase when we will start to go have economic growth and interest rate increases, okay? Then it will go to that mid-recovery and then go past mid-recovery into growth. And then eventually what they want to do, they want to increase interest rate so that it doesn't overheat, right? It doesn't overheat. So that's why they increase interest rate to tap the brake of the market. And then eventually the market, when it reached, usually after the increase, right, guys? Okay, I want to share with you all how to know when there is going to be a crash. How to know whether there's going to be a stock market crash. This one also have to look at interest rate also. The public can also guess, okay? Based on interest rate, right? Based on interest rate, right? How do we know the stock market is going to crash? Okay. So usually, right, when they increase, they will not, after the increase, right, they will not immediately decrease. Okay, so what do you do? They will flatten. Do you flatten? No more increase. The market is good. Okay, the market is not overheating. The market is not slowing down. So they increase and then they will plateau. Do you follow what I'm saying? Plateau only. Not even say decrease. Just plateau only. Okay. That is the time that you need to be more cautious. When everything is rosy, when everything is moving, interest rate is not increasing, economy is booming, then you need to be more cautious. Okay, later I'll show you the chart. Okay, then when they first decrease, then stock market, what happened? When they first decrease, stock market goes so up. Opposite. After the first decrease, right, stock market generally goes what? Down. Do you follow what I'm saying? Okay, this is the chart over here. I'll show you the S&P 500 chart. Okay, so up, right? This is low. Okay, this low, and then this is the CPI number, right? No, this is the Fed fund rate, right? Okay, the Fed fund rate over here. So you can see when the increase, okay, 2004, when the increase, stock market goes up. Yes or no? Like this is the S&P 500. Like yes, if you understand this S&P 500, this S&P 500 go up, interest rate goes up, positive correlation. Yes or no? Then after that, interest rate flatten. Yes or no? Interest rate flatten, stock market continue to go up, but you need to be more cautious at this point. 06, 07, but I don't know whether you are there, but 06, 07, things start to get rosy. Do you follow what I'm saying? We just finished our SARS, start to get rosy. Pre-global financial crisis, things start to get rosy. Interest rate is flattening, and then stock market is booming. Okay, then you need to be cautious. Okay, then after that, interest rate cut. Interest rate cut. When it cut, you need to be cautious already. Okay, don't think cut is good. Actually, cut is no good. Okay, so they keep cutting the interest rate. Then what happened to the stock market? Keep going down. Do you all follow what I'm saying? Like yes, if you understand, this is the Fed fund rate, right? Okay. Then after that, remain low for what? This is a global financial crisis. Okay, so Lehman Brothers collapse, and then bad. Okay, the stock market was bad. Then after that, the interest rate remain low. Okay, remain low until the Fed said, hey, I think can increase rate. And they slowly increase the interest rate. Initially, reaction, what happened? Initial reaction is a bit jittery again. But after that, after a few months later, the market goes on a bull run again. Can you see? The market goes on a bull run again all the way until here, then flatten again. Can you see? It flattened again. Okay, flatten again. Then after that, what happened? COVID. Okay, COVID happened. So once they start to drop, usually it is actually reverse. Do you follow what I'm saying? When they increase interest rate, people think it's bad. Okay, actually it's good. Okay, when they start to drop or when they start to flatten, you must be more cautious. But yes, if you understand. Okay, that means they feel that they can see that forward, maybe it's not so good already. Okay, they start to reduce interest rate. They are not so positive of the forward economy, so you need to be more cautious already. So when this part, when they flatten, okay, the stock market continue to stay flat. But when they drop, right, this stock market go up, but it's a knee jerk. Then after that, COVID happened, bam, it came down. Okay, then right now we are here. Okay, but yes, if you understand. We are here right now. Think this one small up. Okay. Okay. Okay, so so we isolated the thing about interest rate already. Yes or no? Okay, so generally the stock market goes up. Do you follow what I'm saying? Generally the stock market goes up. But yes, if you understand, it's called Fed Fund. You just go and see Fed Fund, just Google Fed Fund. Okay, so next thing, this one more interesting topic, not interesting topic. Do you think inflation is good for, this one I didn't cover in the SMT graduates, okay, but do you think inflation is good for stocks or bad for stocks? Like good or bad? This one I haven't covered, so you all may not know. Okay, let's take a look. Where is it? Oh no, where is it? Okay, anyway, this is the interest rate again. Okay, 3 months later, 6 months later, 12 months later. Okay, so I want to share with you all this. Okay, generally, if you talk about the inflation, good for stock market, in real terms, it's no good. Do you follow? In real terms, means because let's say example, inflation is at, let's say 7%. Okay, the stock market must move up 7% to equalize. Do you follow what I'm saying? If let's say it's 5%, then the stock market at least must go 5% to be equalized. Do you follow what I'm saying? Don't buy bond. Bond no good at this point. Okay, so okay, later I cover that. Okay, so do you understand stocks right now? Okay, so in real terms, you may look at the stock market. Hey, stock market went up 7%, but you must remember inflation also went up 5-7%. So actually, there's no real returns. Do you follow what I'm saying? When there is inflation, okay, so that is something to take note of. In general, we are not talking about extreme example, but in general, normal inflation is good for the stocks in general terms, but in absolute term, in real value, it may not be good. It may be the same. Okay, so then how to position yourself in the rising inflation scenario? How to position yourself? What stock or what sectors should you be positioning yourself? Think about it. Okay, think about it. Okay, everything I mentioned must be logical. Okay, so now we have the economy that is in a rising, the cost of money is higher. Okay, the cost of money is higher. Okay, so what do you want to put it in? Okay, so generally, what are the stocks that will do better is number one, like energy stocks. Okay, energy stocks will go better because inflation. Okay, because of inflation, energy stocks will do better. Commodity stocks will do better. Stocks that not so growth. Okay, not so growth, because growth, the challenge with growth is some of them, they have no earnings. Do you follow what I'm saying? They have no earnings. They have no they don't have PE ratio. Of course, there's no E. Okay, the E is PE. The PE is very, very high. Do you follow what I'm saying? It's like 100, 200. So when money is cheap, okay, yeah, you invest in growth, makes sense. But when money become more and more costly, it become less, and it becomes better to invest in things that are more real. Do you follow what I'm saying? Let's say example, you have a dividend, that a stock that's paying dividend, let's say 5% and things like that. Then you want to invest in things that are more real. Do you follow what I'm saying? Okay, because when you are things is cheap, you can just make a bet. This 100, 200 PE stock may in the next few years make money. Do you follow what I'm saying? But when the cost of the fund become more expensive, you want to invest in things that are more real. Do you follow what I'm saying? So that is that's what I'll do. Commodity stocks, energy stocks, basic utility will be later. Okay, basic utility will be later. Basic utility when they become more defensive. Okay, so I will say that right now we are at the and best. So there are three. So commodities, energy, basic materials. These are the stocks that will generally go up. Okay, like yes, if you understand. By the way, everything I mentioned, you can just Google, then can find out more. Yes or no? Okay, you can Google, then you can find out more information. Okay, so whatever I say, I'm trying to simplify the thing, okay, so that it become not so complicated. Okay, so property, right? Property, it rise, but comparable to energy, comparable to others, is slower. Okay, it's slower. Okay, S&P or stocks, right? Because S&P, there are growth stocks and then there are value stocks, so it may be a mixture. It may be, at the end of the day, it may be flat. Okay, but you talk about energy stocks and commodity stocks and if basic material stocks, they generally work. Okay, like, yes, if you understand, I don't know where is the chart, but there was a chart for rising interest rate. I will show you next time. Okay, I'll show you next time. Okay, so let's go back to the S&P 500 right now. Okay, S&P graduate, please go to the Zoom link. Okay, if you are in the public, if you are in the StreamYard link, please go to S&P Facebook group. Go to the check out what's the Zoom link and join the Zoom, because later we will not be going through the portfolio there. Okay, so must make some distinction, right? Correct. Okay, so for those public first time joining us, welcome to join us. Okay, I want to just sell Goyo here a bit. Okay, so if you want to be part of our SMT community, okay, go to this link at CollinSeow.com/SWB. Let's don't call SMT. Let's do something different. Okay, what should we do? Okay, what should we do? What do you get out of SMT? Okay, what do you get out of joining SMT? Okay, right now, SMT graduate, what do you get when you join part of happiness, which is so cute. You join SMT because happy. Okay, what? Okay, trading knowledge is fun, support. Okay, so wisdom, entertainment, clearer and happy community, structured approach to trading, good community, more friends, and financial knowledge. Zach should write what? Okay. Community, can sleep better. Okay, Mary, very good. Okay, can sleep better, and systematic. Okay, so non-SMT graduates, come and join us in our SMT and grow this together. Every week we have a system that tells us when to get in and out. But on top of that, every week we have a webinar. We have an ongoing community. I've been doing this. I'm very loud already. I've been doing this more than 15 years actually. Most of the people that my peers they don't do training anymore. Do you know that? Most of my peers, they stop doing. They ask the younger generation to. Okay, I'm the only one left. The OG that's still doing training. Okay, but to be frank, I enjoy doing this. I enjoy doing this. It is not much work for me. It is it's like chit-chatting. Like I know who is Zach, right? I know who is Jimmy is who Jimmy Yap, is it? So some and then I know, like after a while I know who are they, right? Okay, so that is part of building community. Of course, right now, right? There is the opening up of we can meet up already. Okay, there's a meetup already. So I think it is good. Okay, I may, okay, don't quote me, I may like call for cannot call for group gathering. And group gathering, 5,000 people right now. SMT now in the Zoom got almost 500 people already. If we call for gathering, then do pack. Okay, but we will call for small group okay, small group meetup, and that'll be good, right? Okay, that'll be good, right? Small group meetup and things like that. Conference, maybe we will do a conference. I don't know. Okay, let's start with something small. Okay, but yeah, I think it's good that we do something like that, get people together, so that we can know who is Weijia, I know but some of y'all don't know, right? So at least like meet up, you all can also meet others also. Yes or no? You can see who is Zach and the rest. Okay. So come and join us. Okay, in our SMT community. I cannot guarantee you a lot of things. Okay, but I can guarantee we will try to have fun. Okay. Okay. So come and join us in our community. Okay. So Oh yeah, if you have any question, feel free to ask also, okay? So I can answer them, okay? So let's go to this, okay? One question people ask, Collin, how do you know the sectors? How do you know what sectors is doing well or not doing well and things like that, okay? So you can go to screener. I don't know whether you have this sector thing or not. Do you have this sector? How many of you have the S&P ETF? Type yes or no. Then you can see, right, over the last 1 week, what are the sectors, okay? So energy, can you see, is the strongest of the last week. Okay, then healthcare, consumer, utilities, all this. Okay, I tell you what, I will put this in the trainer watch list later, okay? I'll put it in the trainer's watch list, then you all can rank. So you can see, right, very quickly, last week, what is the strong sector? So what are the strong sector, guys? Energy, healthcare, consumer, consumer what? You see that, see for yourself, okay? So I'll put in the watch list later, okay? I'll put in the watch list later, then you can see over the last 1 week what's a strong sector, over the last 1 month what's the strong sectors, okay? When what are the weak sectors also, okay? Got it? I'll put it up in the watch list later, okay? Type yes if you understand. Okay, I'll put it up later. Okay, so I can feel the FOMO. Where is the list? How come I don't have the list? How come you have? I'll do it later, okay? So cute, right? Okay, so let's go to the market right now. Okay, let's go to the market right now. Let's look at the S&P 500. This is the S&P 500 or daily. Let's go weekly. Okay, context of weekly means say 1 to 2 years. Okay, 1 to 2 years. Then in one, if you want to go, you want to buy something right now for 1 to 2 years, the view is still unclear. Okay, because S&P 500 now is red color. Currently, is red color, unclear. Okay, so if we will rewind back in June, this was 2020 after COVID. That was when we actually changed color. Okay, change from red to blue. We go long, and then recently in February we went red color, so we go short. We sell. Okay, so whatever we bought here, we sold here. We make about 40%. Okay, since February this year, we are still out of the market for the last few months. Okay, so in 1 to 2 years right now, we are still wait and see. Okay, not sure. Okay, not sure what we are, whether it's going to continue to go up, continue to go down. Okay, so we are not sure. Okay, so type yes if you understand. Okay, so the mode here, right, guys? The mode here is coincide with your candle here. So if the mode here is bearish, it means the candle here is red. Okay, the mode here is follow the candle here. Okay, so that's for 1 year horizon. Okay, for the 3 to 9 months horizon, what happened is compared to April, compared to March, right now we are more bullish. Type yes if you can see that we are more bullish. Okay, let's put a line over here. Okay, somewhere in this is when January, S&P index was at 4488. Can you see here? 4488. During then it is bearish. Okay, it's still not sure, coming down. Okay, coming down. Okay, here it is still bearish. Here it's still coming down. Okay, so here it turns bullish, and here it is still bullish. Can you all see the context? Type yes if you can see the context. Okay, so right now for 3 to 9 months, what is the trend right now? Is it bullish? Is it bearish? Or is it question mark? I don't know. Can we long right now? Cannot, right? Hello, because the mode is bearish, right? Okay, there is arrow here, but there's no teeth also here, no teeth. Okay, so the trend compared to January is better right now. Compared to February is better right now. But at this current price, we haven't go long yet. We haven't buy yet. Do you follow what I'm saying? Okay, we haven't buy yet. When this thing turns, when there's arrow appear, when this mode is bullish, that will be our first buy signal. Type yes if you understand. So 3 to 9 months still not cautious, but still cautious. But we know that compared to January, at this moment, we are more bullish. Okay, but is it a buy signal right now? We don't know. Type yes if you understand. Okay, so we have 2 time frame already. We have the 1 year time frame. We have the 3 to 9 months time frame. Okay, 3 to 9 months. Oh yeah, before that, let's go back one more time frame bigger than 1 to 2 years. That is the just looking at the sentiment. Okay, looking at sentiment. Remember when the bullets start firing, I mentioned one thing, right? In the Facebook group, what did I say? On the newspaper, 24th of February, when they start shooting the first bullet, I mentioned one thing, right? Buy on what? Invasion, right? Okay, that is the longest time frame. Okay, that's type yes if you understand. Buy on invasion, that was on this date lah. Okay, on this date, buy on invasion, that was the longer time frame. Okay, that is like long time frame. Okay, so since then, yes, went up 7%. Okay, but this kind of buy on invasion is not based on systematic trading. It's just general rule. Okay, general rule. Okay, so I would suggest that if you don't have it's better to trade systematically. Does it make sense or not? Okay, systematically. So right now, 3 to 9 months, we are still out of the not long yet. We are still hanging on, wait and see. Weekly charts. Okay, weekly charts now is 1 to 6 months. Okay, 1 to 6 months. 1 to 6 months. What do you think is the trend right now? 1 to 6 months. Up, down, sideways, don't know. Okay, so let's take a look at it. It's sideways, okay? Sideways, okay? So we can see from here, right now we are like in the middle, okay? So if you're in the middle, this will become like the support. Okay, support price is over here. Can you see? Resistance over here. So how do we know? How do we know that we are out of the woods? That means we can be more bullish. Is there a price that we look at that say, hey, I think we are okay already. We are going up from here. How do we know that? Okay, of course, you can use the system and you can see, or can the candlestick change color, arrow with teeth, you can buy. But besides that, is there any other way, just looking at the chart alone, to see that hey, we are out of the woods, we are turning bullish? How do we know that? Okay, I will say, right, it will be maybe using the high, okay, the high of last week's candle. Okay, no need 6 month high. Okay, just high of last week candle. This will give us an indication that we are out of the woods. Do you follow what I'm saying? So if I put a number to it, I will put maybe in fact, you don't even need to put so high. You can just put this level. Okay, so long as there is a wick, there is a wick that is like this. Okay, there's a wick that is above this resistance, or 1 or 2 lah. I would say 1 or 2 wicks above this line over here. I will say that we are out of the woods. Do you follow what I'm saying? Type yes if you understand. So if you go to daily charts, right, this is what it is. Okay, so we want to be out of the woods. We want to be above here. Okay. By then, right? By then, your trader GPS will tell you arrow buy signal already. Got it? Okay, we'll tell you arrow buy signal. That's the reason why it's good to have a system rather than just use TA. Okay. On the other hand, I mentioned this before in our graduates group. How do we know that? How do we know that it's going to get worse? How do we know that it's going to get worse? That means worse than the war. Okay, war already happened, right? So everyone already know war happened, but now it's worse than the war. That means something else beside the wall. How do we know that the stock market is going to drop worse than the wall? Okay, it will be below this low. Okay, it will be below this low over here. Okay, in my opinion right now is still the lower probability. Okay, the lower probability. That means we are still looking for a consolidation. Okay, and then a rise after this. That's what I view. Why is it like that? Is because of this. Just now I show you all this already. Yes or no? Okay, I show you all this interest rate and the rising already. Do you follow what I'm saying? Why I had this hypothesis is because of this. Okay, if you zoom out, this weekly charts, if you zoom out, you can see that the rising of the interest rate initially will be some kind of correction. Like example over here, when it's first rise, right? When it first go up, right? Where is it? When it's first go up over here. Oh, can you see the first rise? There will be turbulence over here. Make sense or not? Okay, there will be turbulence over here. So you just need to go right through this part. Okay, so you can see. Oh, so when the initial rise, this thing is turbulence. Okay, for a while, and then after that, it will stabilize and go up. Okay, so right now we are in this going through this uncertain times. Okay. Okay, so that will be my view, but doesn't make it the right view or the wrong view. Just make it my view, maybe wrong view also. Okay, public understand. So it is not. That's my view. Okay. And then we can go into the shorter time frame. The shorter time frame with daily charts. So daily charts will be more swing trade. Actually, swing trade already had a setup. Yes or no? That yes, if you understand that is a swing trade setup today, this week. Okay. That yes, you can see. Okay, moving average change already. Yes or no? Moving average change from net bearish to bullish. Price came from high, came back down to low. CCI dropped below -100. Yes or no? Oh, so what you do, you mark the high to trade this up. Okay, the 5 days trade. Okay, you remember must trigger. Okay, trigger already, then put a stop loss. This is only a 5 days trade. Okay, so we will see this week. Okay, we will see this week how to trade this. Ayo, daily swing. You all know how to do daily swing? The setup is the same. Okay, 20, 40 MA. Okay, CCI -100. Then wait for it to pull back. This actually triggered already. This is triggered already. Then put a stop loss. Stop loss will be below the swing low here. Got it? So right now you are in the trade already. Okay, for daily swing. Okay. Okay, so this is a swing short-term setup coming down, going up. Okay, short-term trading setup. Okay. So so this will be for S&P 500. Any question? Oh yeah, by the way, your S&P graduate, you watch the webinar on the CCI Extreme Indicator. If you have not, please go and watch it. Okay. For me, right, doing like videos rather than live, it is more difficult. Okay, because sometimes I redo, do again and redo. Okay, like live, I just do live. Okay, but master class, usually I will do 1 time, 2 times, 3 times. Okay, I'll do a few times. Okay, so go and watch this. Okay, CCI Extreme. Okay, oops, I can show you all the password, but you can see, right? CCI Extreme. Go and watch the webinar. Okay, I will show you a few ways to use this CCI Extreme. It's quite interesting. Those who went through the webinar, do you all find it quite interesting? Okay, instead of having it static, okay, it's a dynamic range. Yes or no? It's a dynamic range rather than a static range. Okay, so go and watch that. Okay, it's quite interesting, and it can also become a system by itself. Okay, so that will be the CCI Extreme. Okay, go log in to the premium members area. Go and log in. For if those people who don't have valid premium members area membership, please go and find out how to get the premium membership login. Okay, I mean, you got the link. Okay, how to find out more about the premium membership, go and watch it. Okay, actually live is easier. For me, live is like, because of interaction, you can ask questions and things like that. Okay, but my boss Mark say must do video. Okay, just do video. I always say he's my brain, okay, because I don't think, I just like he just tell me what to do, I do. He tell me what to do, I do. You feel what I'm saying? So he's like my brain. Okay, I'm the horse, he's the jockey. Okay, so any question on S&P 500? Type yes if you have no question. NASDAQ, how about NASDAQ? Yeah, NASDAQ. Hey, those people who went for the ACT, good, right? You all see like, wow, what is ACT? Okay, so back to, I just use one time frame. Don't use so many time frame. If not, very confusing. Okay, let's use 3 to 9 months. Most people will not trade for 1 week. Yes or no? Most people will not trade for 1 week. They will trade for maybe 3 to 9 months. So I just talk about 3 to 9 months. The view is the same. Okay. Let's say example right now, compare same price, right? At 14,300, right? Compared to here, compared to this part, compared to here, compare right now. Okay. Market is turned more bullish. Okay. But market is turned more bullish. However, there is no buy signal yet. I feel, okay, this one I guess one. Okay. If, okay, the keyword is if we have a leg up. If we have a leg up, okay, if we have a leg up, right, obviously the weekly chart will turn bullish. Yes or no? Okay. If we have a leg up, this indicator will turn up here. But yes, if you understand. Okay. So when this thing turn up here, then this candle will be blue color. Okay. So you can see, right? This is red color. This is blue color. So once it crosses the 0 line, okay, then this one will turn blue. Okay, so once it crosses the 0 line over here, once it crosses the 0 line over here, right now not yet, but let's say example the price clears up above here, okay, then this will cross above 0. Then by then you will have a clearer signal. Do you follow what I'm saying? That yes, if you understand. Okay, so as NASDAQ said. Okay, next we go to Hang Seng Index. How many bought Hang Seng Index in the last few months? April, we started October, last 6 months. Like me, will do bought something. Okay, so this is our long-term value price. Okay, so why is the long-term value price? This is all the crisis that we went through. Okay, this is 1998, which is called the, you all know what 1998 it is? It's the Asian financial crisis. Affected Singapore a lot. Yes or no? Asian financial crisis, Indonesia, Thailand, Singapore badly affected. Okay, then we have the SARS. SARS was slightly higher, also badly affected in Singapore, badly affected. Okay, if you think COVID was bad, SARS was worst, because people feared that when they go out to the street, they will die. You know, so that is what very, very fearful. Anybody was around in SARS? Okay, so you all remember SARS, right? Then global financial crisis. Actually, global financial crisis for Singapore, it is not so bad. Okay, a bit cushioned already, I feel. Okay, property prices quickly rebounded. Some of the more finance people are more affected, but general economy we're not so affected. Okay, then recently we have the COVID for Hang Seng, right? They even dropped to the extreme. Okay, this is the extreme, this extreme line, right? They even dropped to the extreme. So there's COVID, and then recently. Okay, recently is called what? I don't know what is the name called. Okay, recently lah. Okay, so World War III. Okay, some kind of war lah. Okay, maybe war and things like that. But yes, dropped through the extreme. Okay, so of course the narrative is going to be bad. Do you follow what I'm saying? Okay, it will not be narrative good one. Okay, so similarly over here, over here, over here, over here, the narrative is going to be bad. The news you hear is going to be bad. It will not be when you on this day when the price is at the low, when this day the price is low, they will say that something like, oh, global financial crisis happen and then it is going to get better. On this day will never be like that. Okay, the news will start to get better only when it's like here. Okay, like here, then the news will start to get better. Okay, when it was at the real bottom, right, news always negative. Got it? Okay, so you cannot really follow news in that sense. Okay, so this time frame will be longer term. Okay, this time frame will be longer term, more than 1 year, more than 1 year, 2 years to do. Okay. S&P 500, and then what else? What else? Okay, so any other index? A50. A50, China A50. I think it's similar to the okay. So China is like trying to, don't know what they're trying to do, okay, but I think they are trying to cool down the market. Do you follow what I'm saying? The tech stocks and everything, they are trying, the all ran up quite high, so they're going to come into regulation, you know, going to spread the wealth and things like that. Yes or no? That's why the stock market also came down. Okay, but I feel that again, similar to Hong Kong right now, it reached kind of value area already. Okay, so the challenge with value area, it may not immediately bounce, it may not immediately touch and recover. It may take 6 months to recover. So what you do is you do dollar cost averaging. You just buy, keep buying in the next 6 months. Okay. Okay, so that will be China. Okay. News update, COVID will eventually be over. Yes or no? Okay, the situation is getting better. Okay, of course, just like trend, right? We got higher high, higher low, or lower high, lower low, right? So now it is the trend for COVID is higher high. I know the sentiment is higher high, higher low. Do you all follow what I'm saying? Eventually, it will get better. Got it? Okay, eventually you get better. That means to say, unlikely it will go back to 2 years ago, that scenario. Make sense or not? Okay. Okay, so whatever news we have, right, price in already. Do you follow what I'm saying? So you don't need to go and study whether the vaccine is effective or how it affect the economy. Don't need, just see the price can already. Got it? If not, very hard. You must go and become scientist to check whether the vaccine work or not. Okay, so see the price. Okay, reach price, buy. Okay, that's how I buy NFT also. Okay, sometimes you cannot just look at too much information. Okay, so just look at price and then use that to do. Okay, but yes, if you understand. Okay, so it may not be the lowest point. Okay, it may not be the lowest point. So what you do is you scale it. Okay, I would say if you kiasu, then scale in 1 year. If you're not kiasu, scale in 3 months. Okay, general 6 months, you just scale in, buy. You should be able to catch bottom. Got it? Okay, STI. How many still holding STI since April 2020? Like me, if you're still doing that, I want to congratulate you all, okay, for taking action, okay? During then, in April 2020, we draw this line, yes or no? Okay? In April 2020, we bought here. Of course, right now, on the hindsight, I should have bought here, yes or no? How many feel that, okay, when we, how many were here? I'm sure some of you are here, right? During this period, if you bought STI right now, you're up like 30%. Do you follow what I'm saying? That yes, if you understand. Of course, right now, the narrative will be better, but during the peak, right, of COVID, the narrative is bad. Yes or no? Okay. In fact, in March, they will say the vaccine will be found only 2 years later. Do you remember? In March 2020, they say the vaccine very hard to come out. Okay, it will take 2 years later before the first vaccine is out. But yes, if you remember, now it's 2 years later. Almost all vaccinated already, right? Or a lot of people are vaccinated. Singapore, most of them, and the market is up 36%. You got what I'm saying? So if you just read news, you will not buy in April 2020. Make sense or not? Okay. So that is the power of price versus news. Okay. Okay, guys. Any other question? If not, SMT graduates, now please go to the Zoom link, last call. Okay, last call. SMT graduates, please go to the Zoom link. For the public, want to just invite you one more time, come and join us in the SMT community. Wow, so this so late already. Come and join us in the SMT community. Let's do it together. It's not that I don't want to share everything. It's just that must make some distinction, right? Okay, so come and join us. Okay, so I'll off the StreamYard right now. Okay, for those that is in the still in the StreamYard, please go and join the Zoom link right now. Okay, for if those who are not in the SMT community, go to this link as CollinSeow.com CollinSeow.com/SWB to join us. Okay, to join us to be part of our community. Let me type this out. Okay, type SMT if you recommend SMT to the rest. Okay, thank you. Okay, I will go to that ready. Oh, by the way, you don't need SMT. The Facebook group is lifetime one, right? The Facebook group is lifetime. You don't need to have a valid subscription to be part of the SMT Facebook group. Yes or no? You don't need, okay? The renewal is only for your members area and for your software, okay? For the Facebook group, okay, for this live training is free for life. Yes or no? Type yes if you understand. This live training here is free for life, okay? So long as you sign up one time, this webinar is free for life, on live, okay? So you don't need valid subscription, okay? For those people that want to have the membership area, want to go through master class, want to have the software to look for the scan, then you need to subscribe. Yes or no? Okay. Okay. For Zoom one, please hang on. Okay. I will off the. Say bye to them, guys. Okay. Quite steady, already. You come one time, I do webinar for you for live, right? Okay. Okay. So bye, guys. Okay. So go and join us in Zoom. Okay. Okay, let's go through the platform right now. Okay, portfolio right now. Okay. Hope you liked the video. If you're interested in finding out more about using the systematic trading system, which I and 5,000 students use to create generational wealth from trading, click on the first link below to join our live web class to learn more.